Joining us on News 9 Live is Mohit Gang, co-founder and CEO of Moneyfront. Mohit, thank you so much for taking time out to speak to us. What a huge piece of news coming in for the markets right at the fag end of the year. The US Fed and its dovish stance means that a rate cut is now a real possibility, earlier possible than expected. Wall Street has already been overjoyed by that stance of the US Fed, and Indian markets too have responded very positively. In fact, if I may use the word euphoria in Indian markets over the possibility of rate cuts coming soon.
Ho ho ho, Krishna. I think it's early Christmas. It's early Christmas for everyone out there in the market, and that Christmassy nip is already in the air. And US Fed has just fueled the excitement across the globe yesterday night. I think Fed was benignly dovish, if I would put it that way, beyond anyone's expectation. The Fed came with a third rate pause, which was very well anticipated and expected by the markets. The Fed fund rates continues to be at around 5.25 to 5.5 level. But I think the more important part was the Fed commentary, wherein I think the Fed chair was very clear when he said that the rate there might not be any rate hikes going further, right?
And wasn't that what everybody was looking forward to, more than the actual decision of whether they're going to pause the rates or cut the rates or even hike the rates? Everybody was looking forward to that commentary from US Fed.
Absolutely bang on. And I think the median dot for 2024 is now indicating a 75 bips rate reduction and showing the yields at around 4.6% by December 2024. In fact, the market is expecting a rate cut, which is much beyond the 75 bips also. And market is kind of factoring in, which was very evident with Dow Jones making a new record life high yesterday night at around 37,000. And all the global and all the US indices were up around 1.4%. But the more important part was Russell 2000 index, Krishna, that was up 3.6%, which is massive for a broad index like Russell 2000, which is predominantly like a mid cap, small cap kind of an index in the US market, right? So I think it has fueled the animal spirits in the market completely, and which is evident across the globe today, which is evident in the Indian markets. The way we have opened, we were any which ways quite euphoric, and now I think it's adding fuel to fire. The market is completely frenzied now.
Right. My question here is that what can stop the Indian markets? You had a 7-month odd bull run. Then came the state election results, which again the markets gave a double thumbs up to. And the kind of run up we've seen since the beginning of December has been incredible. And then to add to that comes this positive commentary from US Fed. So tell us, what can we expect from the markets in 2024, a year in which you have the Lok Sabha elections taking place?
Look, it's very difficult to actually figure out and speak out some negative points in the market right now, right? It is like finding needle in the haystack. But if you were to really ask me what can play a spoil spot, perhaps, I think huge expectations build around 2024. I think markets is already anticipated that the government is coming back in power with full majority. If there is a surprise element out there, I think there'll be a big shocker to the market. In fact, market is running up in anticipation of that news already, right? Because market expects continuity in policies, market expects more government capex and the infra push which the government is doing. So if there is any reversal out there, in fact, if there is if the even the margin of victory is lesser than market's anticipation, I think there'll be a big shocker to the market. Oil prices remain the second biggest risk for Indian markets forever and ever, right? It hasn't changed since time's eternity, and that continues to pose a big risk to the market. As of now, the oil has been cooling off, which is one of the big reasons why, again, markets have done fairly well and all oil sensitive stocks have been flying all across, right? So Brent as of now seems around 73, 75, which is a very good level for India. But any level upwards of 90 will continue to pose challenges, and which can erupt by virtue of geopolitical tensions escalating. Doesn't look like that the Israel-Hamas conflict will go on for fairly long now. Seems there was a statement from Joe Biden saying that the scenario should ease off by January. Right, and if markets were to again take that in stride, which means this month itself, the possible retaliation from Israeli side should kind of cool off. So all these factors are there, geopolitical, oil, other things, and maybe a shocker around interest rates, which doesn't look likely to happen right now. These are the negative spammers. But my sense is market has taken everything into stride right now. Even an iota of good news is blown out of the proportion, and a
Right.
biggest of bad news is actually taken in stride.
All right, all right. My question here is that any particular sectors that you would have your eye on and you would tell retail investors to focus on in a market like this? Because bear in mind, just about a month or two ago, a couple of months ago, we were talking about how overheated the markets are. And the markets are blowing past all levels on a daily basis. So tell us, from retail investors' perspective, in an incredible bull market like this, what are the sectors that they should be targeting going forward?
Look, anything and everything seems to be flying, Krishna. But if I were to pick up my choices right now, I think it depends on what kind of a time horizon do you have. If it's a fairly small time horizon, I would say PSU banks right now, though they have risen a lot in this rally already. But yes, the comparative valuations still remain very, very compelling as compared to the private sector peers. And the kind of cleanup which has happened in the PSUs and the kind of government push which is happening across the country on the infra side, the biggest beneficiaries will continue to be PSU banks, right? And so I think we continue to remain extremely bullish out there. And the second bet will again then be in the financial space itself, which is private sector banks, because anything and everything which is happening around country's growth is finally fueled by bank credit, right? And I think private sector banks again remain a very, very favored zone. They haven't done much for last 2 years put together, and it's high time few of the largest private sector banks should pick up steam in this rally. And the third one would be a slightly longish bet, but we remain bullish on IT pack. Right, and this could be a slightly contra kind of a bet currently, given the way IT pack has behaved of late. But if the rate cycle were to reverse, and the indication from yesterday's Fed commentary was that the rate cycle will start reversing in the next calendar year, then I think the IT pack should really, really do well. And there are certain indications that even the order books are coming back. Large cap IT is extremely, extremely fairly valued right now, cheaply valued, in fact, if I were to say. So my sense is yes, slightly longish bet, but yes, IT pack is looking good.
Mohit, isn't that the case with the Indian markets? When in doubt, buy IT, because there is whatever be the current situation right now, India will eventually find a way to push forward its IT and IT services sector.
Oh, yes. I think, look, we have been leading that pack, though we are still not in that deep tech kind of a state, but I'm sure we are reaching there basically. So, all the cutting edge, new age technologies aren't coming out of India, to be very honest. But in terms of IT enabled services, I think that's the zone which we guys have mastered, and we continue to lead the pack out there globally. So my sense is that is our foray, that is our forte, and we'll continue to rule the roost out there. So
Okay.
yes, being a defensive pack and not perform for last 2 years, I think it's a good concoction for next 1 year.
All right. Also, while talking about sectors, also talk to us about the realty pack. So much of talk back and forth about the realty pack underperformance, but then, going forward, there's a good chance that the realty pack will give the kind of returns that retail investors will like.
Look, underperforming for over a decade now, and I think again it was a story which was waiting to come up. As there are many, many positive triggers out there. The first and foremost is that the rate cycle has peaked, especially in India. You can be reasonably certain that the rate cycles have kind of peaked, which is a very good sign for real estate, because as the rate cycle reverses, the real estate pack will start picking up more steam. There's been a very high demand on the ultra high segment, HNI segment, and even the affordable housing segments, right? And which is more fueled. Look, whenever equity markets have done well, Krishna, historically, there's a lot of profit churning which happens, which comes out of the equity market and goes into the real estate cycle. A real estate cycle is something which always lags the equity cycle by 6 months to a year. And if that were to be in any indication, I think the way equity cycle is going on right now, you will see a definitive boom around the real estate cycle also. Plus, the commercial demand is again picking up in the country. Work from home is now out of the window, and quite a number of in fact, all the offices are back on in the physical form and avatar. So my sense is everything will look up good, and that is a pack which should continue to do well through the course of next calendar year.
All right. The other thing I want to ask on behalf of retail investors is this: the number of IPOs hitting India's stock markets. I mean, just this week of December alone, 7 IPOs and 2 listings. You have a stock like iReda, which listed about a month ago, which is giving phenomenal returns. And then there is all the complaints of retail investors. So you keep applying for IPOs, you don't get anything by the time the allocation is done. But tell us, talk to us from IPOs perspective. Any particular IPOs that you have in mind that retail investors should go for?
Oh, Krishna, honestly, it's inky pinky ponky right now in the IPO market. You touch anything and it's turning gold. The current pack, which is ongoing, is an extremely interesting pack, especially the DOMS and the Inox IPO. They're very good players in their respective domains, right? But overall, I think the story is across the board. I can't cherry pick any one or two names out here because the market is in such a mood right now that the valuations have gone beyond the roof, and people aren't worried about the rich valuations. I think people are worried about buying anything and everything at whatever price it is available. The problem is people aren't getting allotment, right? Even the anchor books, if you see, I was reading somewhere one of the leading AMCs. In this Inox IPO, have applied for a 2,500 crore anchor subscription, and we got somewhere around 30 odd crore kind of a subscription, right? So that's the kind of demand which is coming up for these IPO names. The gray markets premiums are all indicative of what is happening. Look, so people have to be careful because these are all richly valued. But as of now in this market, I think, as I said, everything is turning gold. So it's a good time for people to just keep applying in few of these good names and hope if you get listing, and if you're lucky enough, then yes, there is a lot of money on the table to be made.
Okay. The only other question I've got to ask you is this: when markets are running up and further up, so are you also of the belief that every dip is a buying opportunity?
Look, we have been very firm believer in one thing, and we have been quite out in the market saying this one line quite repeatedly last year, which is that the cost of staying out of this market is much higher than the cost of staying in and facing any correction if there is any likely in the near future, right? So you cannot miss or you cannot watch this market from sidestep, because this market will not give you an opportunity to enter in whenever you want and like, right? The corrections are like 2%, 3%. I haven't seen anything beyond 5% for last whatever 6 odd months, or maybe even for the full year put together, if I recall very well. Maybe the first quarter we had some correction, but yes, after that we haven't seen anything beyond 5% in this market, right? So yes, if there is any opportunity, the India story continues to remain fairly robust. The FII and domestic flows, in fact, have been extremely robust. FII flows are back in the market now for last 1 month odd. So my sense is stay in the market, stay put, stay with your allocations. If market provides you an opportunity, yes, definitely go out and cherry pick your favorite names.
Okay, stay in, stay put, and if you're not in, when is a good time to get in, Mohit? It's the worst question in the world. But what if somebody watching this broadcast is yet to get in? When should they get in?
The right time, as always, was yesterday, and today is the second best time. I would still continue to believe so. Look, it's a secular long-term story out here, what we are talking about. I'm not the one who is giving a call for a month or 3 months. If you're an investor with a 5-year horizon, any time is the right time. Please get in. You will face those dips and corrections and volatility in the interim, but I think the overall story looks extremely robust, and the one which everyone should ride.
Okay, one final comment from you. What are the levels that you're expecting Sensex and Nifty to hit in 2024?
That's a tough one, Krishna, to be very honest. I think, but yes, just to be very fair and optimistic, I think we should expect double-digit returns from the market even in the next calendar year, which is extremely doable given the earnings growth trajectory. And my sense is private capex should be back post-elections to kind of supplement the government capex push. All these factors put together, double-digit growth for Sensex, which is high teens, I think is extremely likely.
All right, Mohit Gang there getting us a sense of what to do in this incredible bull run in the Indian market. So Mohit, thank you so much for taking time out to be with us here on News 9 Live.
Thank you so much, Krishna.